What is going on, everybody? And in this video, I'm going to go over the state of the markets, go over the SPX Bitcoin, and some other tickers that I feel are going to be in your best interest as of tomorrow. Now, let's go straight into the state of the markets as far as that goes. We did have Powell today come on. He was in front of the Senate, essentially talking about his nomination and his reasoning, essentially going into why he hasn't taken any action to raise rates. Everybody is very concerned about raising rates, but Powell was the old Powell of old, not the Powell we saw that was hawkish, even though I don't think he was really hawkish last month. He was a little bit more to the extent where he started talking about rate raises. And today he reiterated that they are just in preliminary talks to raise rates. And then the Senate came out and essentially said that what tools, essentially trying to get him to say, okay, well, what tools do you use? Rate increases is what they were trying to fish for, to get him to say, to give a time frame. And they even try to talk about March. Is March going to be the time? They try to hint at this, and they reworded the question multiple times. And what he did was he said, we will see. We will see. We will see. Now, a bunch of people have said there are 4 rate raises. There was another Fed member that came out today that said there was more than likely going to be 3 rate raises. I think in my mind, my key here is that we will be lucky, I think, to get 2 rate raises. And I think March could be that time, but it could be delayed. It really just depends. You got a lot of people that are essentially doing their own thing. They aren't working a 9 to 5. So you got the amount of people that Powell, the economy needs back in the 9 to 5 to essentially work the system are not there. And that is what Powell is trying to iterate, that he thought by this time that people would be back working a 9 to 5. They are not. November, I think it was November was the highest rates of people, the people that were out of work, but they consider people that are out of work that are essentially working for themselves out of work. So being said, there is a big predicament here. So Powell is not wrong in saying that he can't justify raising rates when there are people that are still hurting out there. And the Senate came back with a lot of the similar questions you have. Well, what about gas prices? What about, food prices? Again, he went into a whole spiel that doesn't really affect how they gauge inflation. But being said, needless to say, he gave us a clear answer. There isn't going to be a rate raise in a while. Now, this brings us into tomorrow. Tomorrow, we have the Beige book and the core CPI year over year tomorrow. This is at 8:30. So we got the month over month and the year over year at 8:30 p.m. Eastern Standard Time. So an hour before the market opens, you're going to get core CPI. Now, in my mind, I don't think that is going to make that big of an impact. We already know there's inflation. It's been beaten down. That's the new information that is what the market's going to take and run with. The core CPI, nobody cares about that stuff. The Senate has been trying to pick out which data Powell is looking at. And Powell keeps just reiterating, yes, I see the data, I see the numbers, but we're still waiting. We're still waiting. So I don't think the core CPI, it's going to bring some volatility, but it's not going to bring some big crash to the market. It's not going to bring, it could push the market back up. It could just be delaying the market is what it could be doing. But ultimately, we do have the Beige book tomorrow as well at 2 p.m. Eastern Standard Time, and that will give us insight into the next meeting. But my thesis is that this next FOMC meeting is just going to be more preliminary talks on rate raises. It is not going to be a time frame. People are looking for a time frame. Being said, without a rate raise, it is going to just continue to feel big tech. Big tech growth stocks will start pushing I think because you got earnings right around the corner. You got starting out with Netflix next week. And then you got big tech. I believe Apple and Tesla and some of those bigger names are the following week, the same week as the FOMC meeting, which again, I don't think is going to really matter because Powell pretty much reiterated that there's nothing going to happen. There will be no rate raises. Yes, we'll consider some other things. We'll do some other things to try to balance the books, but ultimately understand that there won't be a rate raise as of yet, not in the foreseeable future. Yes, we're going to talk about it, but it's not going to happen anytime soon, is what we got from him today. And that was directly from Powell. And yes, you're going to get plenty of Fed members that are going to give their own opinion, and the media is going to run with whatever. Understand the market is very bullish tech right now. There's no reason to sell. The variant isn't doing anything. The market is extremely bullish. We've been selling as soon as we get all-time highs for no exact reason, for random pieces of news on the Fed. But going into earnings, I think we're going to see a massive run here, again, that we haven't seen in a while. But you have to remember that as soon as the Fed meeting comes around, as soon as there's any kind of hint of taper time frame, we will start correcting again at that point. The reason we would correct it now was because of the fact that they were throwing out there last week that, hey, there's going to be some massive tapering. There's going to be 4 rate raises. They threw a lot out there. But again, it's all preliminary discussions. It doesn't mean anything is going to stick. And a lot of times, only a fraction of what they say will actually stick. So as far as the market looks, we did bounce off the trend the other day. We're going higher. We are breaking back over the 20. So we want to make sure that we can break over this tomorrow, the 47.10 mark. Ultimately, I think with the CPI and the Beige book, I could see us possibly pulling back down into the 46. Typically, when you break, you'll retest the 50. You could almost call this a retest here, but we want to see where we open up tomorrow. If we open up above the 47, I think we're going back to all-time highs. Again, keep a short time frame. You have to understand you're going to have to keep everything short time frame here. Again, once we hit all-time highs, I'd be very cautious about some information coming out about trying to sell, whatever that may be. Maybe more talks about rate raises and then make the market dive back down. So we're probably going to play this up-down chop throughout the year, I think, until towards the end of the year, till we actually start getting the actual rate raise in the actual time frame. So being said, I am very bullish. I think, again, that tomorrow is just kind of more of a delay than anything else. Once we get the information tomorrow, I think we're going to continue a very strong bull run going into earnings. I realize we're just 2 weeks out. I think this is a perfect time to buy the dip. Again, not financial advice. Going into the next couple of days, again, go with the bigger name stocks, the more well-known stocks. I think you'd be good. Everything has really been beaten down, so you got quite the pickings out there. Now, Bitcoin, going over Bitcoin, again, still very bullish. It did bounce right off of the support very strongly. We got the information about billionaire, I think, putting half his net worth in yesterday on this dip down below 40. We have since bounced nicely out of there today. I think with everything going forward and the unknown, this is what fueled Bitcoin going into December, was the worry of inflation. Now you got the worries of inflation with what Powell has stated. So now I think you're going to get another run on Bitcoin, essentially a hedge for inflation. That's what they like to call it, a hedge. But the underlying truth is the technology underneath it is what's really going to drive cryptocurrencies up higher. And understand that the NFT side and everything like that will drive crypto to new all-time highs. So that is something I think currently it's just an inflation hedge because people aren't educated enough about the space. But I think this year will definitely change that. So going into tomorrow, Tesla, I think right now you got to start really looking at, okay, well, I got earnings in 2 weeks. What are some of the best stocks to get into? Tesla has proven numbers as far as deliveries. So going into earnings, Tesla is definitely one you want to be watching. You want to be buying dips on. Again, not financial advice. Some news can come out, black swan news, and completely make the stock go down to zero. You have to be aware that you have to manage risk, but understand that Tesla definitely has the numbers. Now tomorrow, I'm really kind of watching this 1060 mark. If it can hold above that, I think it would be great for another strong push up. Again, I think we're going to try to retest that 1210 mark, possibly even the other all-time high, the actual all-time high here, the 1250 mark. I think is a strong possibility we could do that. To break that 1250, I think is going to take the actual earnings report. So I think we can try to make our way up to that 1200, maybe 1250. We might get stuck at 1200. Determine what's going to happen there. Then from that point, once actually earnings hit, I think if they destroy it, knock it out of the park, then it will break above and do some running. But aside from that, I think we could still get at least a 100-point move out of Tesla going into earnings. Google is another big one that always crushes earnings and something that has been bouncing back lately, very strong. Again, you are coming into resistance here at the 2850 mark. You have to be aware of that. It's had some bigger moves yesterday and today. Given tomorrow, if we do sell off, I expect this. I'm looking for this 2741 mark. If it holds this particular zone here, I want to buy the dip here if it does hold. If not, I'll let it come down further. But again, it's very rare that Google does come down around the 200. Normally, it's a quick bounce and then it bounces right back up. It does destroy earnings. So being said, I think the earnings run up for this is going to be big. Earnings itself will be big, and the continuation after I think will be big. ASML is one that has earnings next week. It had a massive 30-point run today. I'm looking for this 707 mark tomorrow. If we do pull back and we get back in here, looking for a triple bottom here, looking to buy the dip here and start running this back up. I think going into earnings, once the market turns, I think this one's ASML is really going to start running. ASML will also help NVIDIA and your AMD start pushing as well. I believe chips will do very well once the earnings come out for ASML. I think you're going to see the rest of the chips really do really start get that sympathy play after that. And then Apple, as always, does really well. It too has also been bouncing very well. Tomorrow, I'm kind of looking for it to hold this 174 mark. We're going to try to get a retest on this tomorrow. Again, depending on what the market does, if the market dips because of CPI, I think it's going to be quick and short-lived. Again, it's going to happen before the actual bell. So we might just get a quick wick like this one here and then pop right back up and start running. That's what I'm kind of thinking tomorrow. I think that's just being a delay. I think the Beige book, there might be a slight hesitance going into the Beige book at 2 p.m., but I don't really think it's going to do that much. Again, Powell really iterated today that there isn't going to be really a change. Yeah, we're going to talk about it some more. We're going to talk about rate raises, but that's about as far as it's going. So we'll have to see. Amazon, massive rip past 2 days, does have resistance here at the 33.55 mark. I definitely really want to watch that. That first attempt to break that is going to get rejected really hard. Just be mindful of that. It could be a good short if you want to wait for that. Or if it does hold this 33.03 mark, be prepared to sell before it hits this 200-day moving average because it will get rejected hard after that. Then once it breaks above some of this resistance, I'd be looking more at this. Facebook is one of those ones that kind of really bounces all over. I don't really like pushing this, but ultimately, if it can break essentially above the 337, get above the 50 on the daily, do a retest, I think this might actually have a chance to start running up. Facebook has just been extremely choppy, has these like pump and dumps often ever since it's gotten that bad news a couple months ago and just has never fully recovered. But I think for earnings, it might actually get that ball rolling in the right direction. Roblox is another big one I want to watch. I actually have a position in this. which I've talked about before, but I'm watching this 200 mark and see if this holds tomorrow. I think we could possibly even dip back down to the 85, 10 mark. We didn't really retest this yet. We did pop above it. But tomorrow, if we do get any kind of pullback on the core CPI and stuff, could get a quick wick and then start continuing up. Airbnb is another one. Did the same thing, at a monstrous day, actually. Straight for that word go, it's pretty much gone up. So looking for this to come back down. It does play ranges very well, which is something I do like about Airbnb. See if it does come back down and retest that. That 161 mark. We'll see about that. I don't know. It might just come down and retest the 166 mark. That 200 moving average, if it can hold above that, we can definitely start going all-time highs again. But we want it to hold. We got some great key areas here to watch. Even your 20-day moving average is sitting at 168. I don't know if it's going to really hold that. I think it'll more than likely come down to the 200 on the daily, since it hasn't really tested that. It was just a brief test, and then possibly head back up. I do like Airbnb. Shop is a big one I really want to keep an eye on. This thing on the daily, the e-commerce space has really been hit hard in general. Amazon obviously bounced right back, but the big thing to keep in mind here is the closest daily resistance, you could probably say, is that 1265 mark. So you have a lot. So you almost got a 100-point move here. Without any really true resistance. Yes, there's some roadblocks here, but if you're going off the daily, you've got a big gap to kind of fill here. So I think Shop could be one to really keep on watch. You really want to see if you can break this 162 or 1172 mark. If you can break that and retest that, I think Shop can start getting back in gear and start really making up some ground. Microsoft is one. I know a lot of people have been talking about Microsoft, but it did look like it tested a retempt and failed. Tomorrow, if we can break above the 318 mark and hold above that, I think Microsoft would be good. I don't like to trade Microsoft only because I believe Microsoft trades very slowly. It's not a quick mover. UPST is another one I want to watch tomorrow. It's actually hit support yesterday very nicely. And it is kind of being held at this 120 mark. So this new supply zone or demand zone here. I want to see if it does hold this, because we did try to break out of it today. If we do retest this again, 117 mark, try to break above the 125 mark would be great, is what I'm kind of looking for tomorrow. So first attempt to see if it'll hold the 117 mark. If not, try to catch it back down at the 107 mark. I think UPST might stall, but I think run up to earnings could really do some damage, and one I think you should really keep an eye on. Affirm is another big one. Same thing. It hit rock bottom yesterday. I want to see if it does come back down into this one, the 77 mark. Looking for the dip by there. If we do get any dip, I think that will kind of be the last dip we might get. In my thesis now, if something does change, things change all the time, but I really think the core CPI and the Beige book are just excuses to bring volatility. After that, I think we're going to get into earnings mode and start really running. So this is just a brief hiccup, in my opinion, but we'll have to see if that's the way it does play out. But that's pretty much what I got for you guys. I know this video is long, so if you made it this far, thank you. Hit the like button and subscribe if you haven't already done so. And until next time, I'll see you guys later.